Good morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, December 14th. Really nasty day in the markets, I'll tell you, on Friday. We gapped down and pretty much kind of stayed there. We were hovering the lows. I'll show that to you in a 5-minute chart. Again, I usually hate when the moves happen in the pre-market early in the European session. Very little opportunity unless you're obviously, if you trade in stocks and you can find something to short, that's one thing. But when you're indexing and markets gap, and pretty much most of the gap was the losses for the day, it's a little bit difficult. Risk reward really isn't there. Anyway, in front of me is the McClellan oscillator, the old trusty McClellan oscillator to read overbought, oversold state in the markets. And sure enough, it is reading oversold. So we are getting close to that selling where I was looking for. I mentioned 70, even 80 would be ideal. You could see every time it even got into the 60s, we got a little bit of a bounce. And here, August 24th, obviously that was that flash crash that we had. And again, back in September. Now we're below that area. And we are, it's funny because we were up about 14 handles, guys. No, I'm sorry, about 9 or 10 handles in the pre-market in the early morning European session. Sold off, and now we're down $3 in the ES Globex session. So not good that we can't sustain any type of bid in this market. So I am looking for that low. And again, a tradable low. Do I think the markets are healthy and going to new highs? Probably not. I mentioned to you last week that there are extreme amount of open put purchases at the 1930-ish area. Now, it's far away. I understand that. But as you know, this market, anything could happen, okay? And there's a lot of stops up above that 2040 area, 2050 area. So we're in between right now. So if the markets and the algos can really push this market one way or the other, we're going to have a big move to the upside and or to the downside. And there is still plenty of time of trading left. Remember, Christmas is next Friday, and we are starting Monday, so there's plenty of time. And we are coming into some seasonal strength right around the 16th, which coincides with the FOMC interest rate decision tomorrow. They start today, and they end and conclude tomorrow, and they announce what's going to happen. I would definitely keep the pallets dry here going into tomorrow's rate decision, guys. Very, very critical. You do not want to be on one side that's wrong. Let the markets decide for you what direction it wants to take, okay? Obviously, the bonds are showing something different. It's really weird. I mean, there is a lot of weird trading going on as far as the indexes are concerned. So let's jump to it. But I'm looking at the McClellan oscillator. This coincides nicely. I mean, I'll tell you guys, if we can really push low here, even lower, I would be inclined just for a trade, look to buy the market or buy any beaten down stocks. Another thing, too, tax selling concludes this week, too, somewhere around there. Now, remember, you could sell stocks all the way up until T+3 at the end of the month. But you just got to realize that the majority, they start moving their book around for year end and they reposition themselves. So just keep that in mind. But look for the beaten down stocks that haven't participated. And again, it's like energy and material. They could really, really, really move nicely to the upside. Okay. Anyway, let's take a look at some of these charts here. All right, 5 minutes. I just wanted to show you guys, just to show you some reality. A lot of people are like, oh, you know, it's a big move low. Yeah, but that was all here. You could see that we just kind of chopped around. Yeah, we did move a little bit low at the end of the day, but you know, risk reward is not there when you're kind of shoehorning in a short trade here. So I usually stay away from stuff like this. You know, possibly even looking for a reversal trade to the upside. Obviously, that didn't materialize on Friday. Okay, let's talk about the dollar here. We have a very large bull flag. As you can see, here's the flagpole, and here's the flag pattern. We broke out, so that's very bullish, right? And now we're back testing, which to me is bullish for the dollar, not bullish for a lot of other indexes. Higher low from this previous low. Now, if we can hold, we can see there's possibly another bull flag forming here, you know? Or actually, excuse me, a big bullish rising wedge here. So we break out of this wedge, then I think we'll challenge the highs and make new highs and get to this high area up in here. But again, you know, the dollar was a little tired and it did come in. But watch, because if dollar has strength, then again, the commodity sector will lose its luster again. Okay. One thing that I don't have on a chart is crude oil. Excuse me. Now, crude right now, the commodity is trading at 34.74. I am liking crude anywhere between 32, 33-ish Even if it got to 34, I would consider looking at some of the oil stocks, not the commodity in itself. Stay away from the USO. I would be looking at more of the ConocoPhillips, even the Exxon Mobil's, Sucor Energy SU. These are the names that are attractive to me. And I will, again, when it comes time, I will show them to you on the charts as well. GLD, the gold tracking ETF. You can see here we had a nice little wedge pattern, which we broke out. Now, the gold itself did not break out of a bullish rising wedge here. Bullish falling wedge, excuse me. It's now back testing the wedge pattern, okay? So I am looking for 1,000 or 100 here, or the GC contract 1,000 or a break. I would love to see a flush, and that could possibly happen of what the rate decision is with the FOMC. So just keep that in mind, okay? All right, so let's run into a couple of things I want to show you. XLK. There's a lot of M formation, N top formations in the indices, and you can see it clearly here. We had the gap, we filled the gap, and now we're moving lower again. All right, this is the XLK, the technology ETF. Again, not really too attractive if you're a bull here on technology. Okay, a lot of the major stocks, the Amazons, the Googles, they're all starting to roll over, and they're at an inflection point now. Which again, I'll show them to you when we start to break down here. All right, take a look at the spiders. You could clearly see this M formation, right? Here's the neckline, and we broke that neckline. Now, usually when you break a neckline, you usually back test and you kind of bear flag. You know, you kind of back test that pattern. So let's see what happens here if this formation is triggered. It did trigger on Friday, but I'd like to see a couple of days below the neckline and then a back test into that neckline, okay? And we just ever so slightly just broke down here. You could even call like this bearish rising wedge. If I take this out, if I take this wedge pattern out, just move this out of the way. I mean, a lot of guys are saying that this could even be a bull flag, and it's possible right now. There's a lot of indecision here. So just wanted to show you this formation here. This could definitely be a bull flag, absolutely. But we want to see if this holds. If this holds and starts to break to the upside, I think this M top formation is going to be invalid and will probably rally. So just remember, guys, right now I see two different things. I see a bullish pattern and I see an M top formation, which is bearish. So let's monitor and see which one is going to work here. And that's what happens. Sometimes you have different patterns, conflicting patterns. The best thing to do is either step aside, don't take the trade, or again, if your day trading is a little different, but still you want to know what the daily charts are telling you. IWMs, M formation, you can see this M top beautifully. We broke the neckline, okay? Now the next step is going to be this little area here. But again, guys, I always see maybe we push lower and then we back test again. So I'm interested to see what happens in the next couple of days. I am definitely keeping a light palette going into the next couple of days. Transports, what can you say? Again, the Russell and the transports were the two market diverging indexes all year long. This is not good here, okay? This is really bad. Even if we rally and we get a Santa Claus rally, be careful, because I would not be loading the book long going into end of the year or going into the first of the year. I think we get some sort of a decent sell-off here at one point. All right, and the diamonds, you can see an M formation here, nice. Usually the M top formation, you have that lower high on the right side. Right side of the M formation has been established. We did not break the neckline as of yet. You can see they're all over the place. And here's the XLF, just to show you for the banks. That broke, and this is not a good sign when you have the banks and financials, and then you have technology not rallying. This is also a very bad sign, guys. So just keep this in mind. Again, another M formation pattern. So M-top formations are upon us. Some triggered, some did not. We do have a conflicting bullish bull flag, on the S&P. So we want to wait and see what happens. Also, again, be careful the next couple of days. Let the market decide what direction it wants to go if we're going to get that so-called Santa Claus rally. Hope it helps. Take care, everybody.